Hi, this is Ian from BeAWinningTrader.com, and this is my market analysis for the week commencing the 16th of October 2023. I'm going to start off at looking at the Euro USD, the Euro dollar, and we are beginning at the weekly chart, which is most appropriate considering we need to analyze and look for direction for the incoming week. So if I just zoom in a little bit here and explain a little bit about how I read my price action, and the most accurate way, in fact, to read the price action is by just beginning by understanding a single daily bar. So last week, you can see here we had a bullish bar, a bullish weekly bar. This is a weekly time chart. Why do I say a bullish weekly bar? Because the close was closer to the high than it was to the low. And therefore, in that understanding, that based on probabilities, that immediately tells me that there is a greater probability of that market breaking that high before it breaks that low. So in other words, breaking last week's high before it broke last week's low. And indeed, that's what it did do. Now you can see the market has been in a downtrend here in the euro dollar, because we've went from nearly 113 right down now to 104 or 104.40, whatever the case may be. So it tried its best last week to rally, all right, against a downtrend. So this is why the importance of going with the herd, everybody, not trying to counter trend trade. Yes, you can on an intraday basis on a small time frame chart, but remember, you're increasing your risk when you do that. Now, the counter action to that, the flip side of that, I should say, perhaps is the best explanation, is that every new trend does begin by a counter trend. But anyway, we rallied. We achieved our price action, weekly price action objective by taking the high last week out to the upside. But most importantly, we have come down now. You can see that this close here, this little horizontal line to the right of this price bar, is closer to the low than it is to the high. That's indicating to me that this market should take last week's low out to the downside before it starts breaking last week's high. And therefore, if the market were to rally in the early part of trading inside last week's bearish weekly bar without breaking last week's bearish bar low, then that would be creating selling opportunities. So if I flick on now to the daily chart on the euro dollar, and to see what Friday's close was, and you also can see that we had an outside vertical bar on Thursday. Now that is the most powerful single vertical bar setup that you can have when you're studying price action and analysing price action. We had a higher high and with a lower low, and it would have closed very close to the low. So therefore, when the market was trading inside that bearish Thursday's bearish daily bar, then that was only creating opportunities to sell. And you can see that that market did rally, but then that market started to sell off. And that market, as you can see in here, we've got the red price bars exactly showing where the market went up. It made a retracement. That's a lower confirmed high than this high. The blue bars turned into red bars, and that indicated on an intraday basis that we had a greater probability of that market going down. We already knew, based on probabilities of the daily chart, that with a greater probability of taking Thursday's low out to the downside in comparison to Thursday's high. And therefore, when we got the signal, that was a great signal. So where are we again for the beginning of the week? We're looking certainly for the lows of Friday to be taken to the downside. And of course, we can see that there's support down here, and that support is at 104.48. And with this setup here, we're now looking for a confirmed lower high. This here to be confirmed lower high than any high up here. And if that were the case, folk, then that means that the greater probability is to take that low of 104.48 out to the downside. But that 104.48 area is certainly an area from which we'd be looking for the first possible support on an intraday basis. So that is my analysis for the euro dollar. Moving on now to the pound dollar, otherwise known as cable, we have a very, very, very similar pattern to that of the euro dollar, because we had a rally that we closed a bullish bar last week. and that was indicating that the high last week should be broken to the upside. Indeed, it was. Price action objectives were achieved, but then it started to come off, and certainly we're back into this downtrend going by the weekly chart because we've got a close closer to the low than we have got to the high. And again, we can see exactly that on Friday's close. Also on Thursday here, we have got a very bearish daily bar. It's not an outside vertical bar because that's a lower high than that high. But once it broke that low there, because that was a bullish daily bar of Wednesday, once it broke that, that's like flipping a coin on its head, everybody. This is just the power of being able to analyze one single price bar. It gives you very much, it gives you probabilities of a market doing this or that. Doesn't give you guarantees, unfortunately, but it gives you probabilities. When you've got probabilities, then if you can put in your risk controls, and based on those probabilities, then because at times when the market doesn't go based on what it should do technically, then you need to have protection in the market. But again, where are we? We've got a very bearish daily bar. We've got a very bearish weekly bar. We've got an indication here of, if we take a look at the 15-minute chart, you can see here that we again made a lower high, confirmed high with a red price bar, coming out of the blue price bars with strength here, and a lower high. And again, that's what we were looking for, to go with the trend based on Thursday's price action close. So for Friday, we were looking for sell signals to take the signal with the trend. And again, we got executed at a nice price. The price was in there at 121.72, and that market one went down to 121.22. So there was a 50 pip intraday move and closed at 38. So even if you held that position right on to the very close, you're still up 30, 40 pips. So you are. So let's take a look at our next market, which is going to be the pound versus the Japanese yen. So again, the pound yen, if I just zoom in here, this is the weekly chart of the pound yen. You can see exactly with a very bullish weekly bar last week, indicating that the high of last week should be broken to the upside, with which it was. So in the early part of the week, therefore, we were very much looking for buy signals. And then this market started to sell off. And again, quite a narrow range week here now in the pound versus the Japanese yen. Okay, you can see that this is quite a narrow range week. Now, it's not a low volatility week because there's been lower range weeks than last week, but certainly in comparison to the week previous, it has certainly a reduced range. Okay, so there's a little bit of thinking going on here with the pound yen. The probabilities is that this low of 181.25 should be broken to the downside, a close of 181.54, and that should happen. Again, that is backed up by the daily chart because we've got a very bearish daily bar both on Friday and an outside weekly vertical bar to the downside on Thursday with the pound yen. And indeed, we had some fantastic intraday trades in the pound yen that I had actually put up, because the pound versus the Japanese yen is the one Forex market that I have on my Discord channel. And it's one that we itemize very clearly. So it is. And again, we had a fantastic couple of trading days on that this week, just past. So again, intraday chart, if we take a look at the 15-minute chart, we had again a lower confirmed vertical bar trading pattern high. We got an entry there, and that was at a confirmed entry, and that was at 182.03. And again, you can see this market went down to a low of 181.27. So again, there was a nice 70 odd pips on this particular trade. And again, at the close, it was at 54. So even there was about a 50 pip open equity if you kept that position right to the very close on Friday evening past. Now, where are we going in this market, and what am I looking to take and trade in this market for the beginning of the trading week? And that definitely would indicate to me that I'm looking for sell trades. This is a possible, could become a possible price action lower high. We've got a setup bar here, but we've no confirmation yet. Okay, that is. Now, if that does get confirmed, then that means that we've got a probability that this market, or sorry, a higher probability that this market should go down and at least break, or at least equal those lows, but I would assume break those lows at 178.03. Now, that would obviously be a fantastic move if we can get involved in that on an intraday or an intra-week basis. So, excuse me, again, as I said, on Friday with the lower high, which is what was expected based on the price action of Thursday. And again, I will be keeping an eye on the 4 hour chart. It's went out of blue mode, which would a very bullish sign. It's come into green mode, which is a neutral mode in the 4 hour. And again, you can see that this 1 hour chart is in red mode. Okay, so um, we've now got a weekly bearish bar. We've now got a daily bearish bar. We've now got a 1 hour red situation, which means that the sum total of selling pressure is greater than the buying pressures. It was all buying pressures over to the left of this chart, as you can see, where the blue bars were. Went into neutral mode when it went green, and then into red mode, lower high. And so that would be the theme that I'm looking for. I would be watching, as indeed in the euro dollar and the pound dollar, I would be looking to see if there's any rally into Friday's range. And if there is, without Friday's low being broken, I will be certainly looking to take intraday sell signals based on that. Now, what we all have to be very aware of is that it can change. The markets, the volatility in the markets, whether it be in the foreign exchange markets or whether it be in the commodity markets or the stock equity indices, it can change pretty quickly, folk. Because the stock indices, for example, which we're going to look at, were looking pretty strong a couple of days ago, looking good. In other words, for a recovery, and all of a sudden, bang, 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 and it's the complete opposite picture, which I'm going to look at next. So, just to conclude, with our currencies on the three major ones, the euro dollar, pound dollar, and certainly the pound yen. At this stage, we're looking for the weekly and daily lows of last week to be broken to the downside. And again, looking for it to get involved in those. We're looking for lower highs on an intraday basis. And if you're lucky enough to have my software trading tool, then you're looking for red price bars. But again, if you're a member of my Discord channel, you've not an awful lot of looking to do, because these are the signals and this is the methodology that I use to put up my signals and take the trades myself. And therefore, if you're a member of our Discord channel, of course, you can copy those. Okay, so we will look at the equity markets next, and then we will finish looking at gold and crude oil. Now, I'm going to start on the Dow Jones, the US 30 Industrial Average, and I just want to point out to you at this particular juncture the power of price action, everybody. Okay, so what we had on Thursday, this each bar here represents a daily time frame period. On Thursday, we had what you call an outside vertical bar, and as I said already in this recording, that the outside vertical bar is the most powerful single vertical bar setup that you can have. So what an outside vertical bar is, again, it means it's a higher high than the previous bar's high to its immediate left, and it's a lower low than the previous bar's low to its immediate left, as you can see here. And then what we're looking for, as we are in every single price bar, is the close, because it is the close that confirms whether there is greater selling pressure or buying pressure within that particular time period. In this instance, this time period is a daily chart. We had a very bearish outside vertical bar, but you can see that this close here was a close that was closer to the low than it was to the high. Therefore, that was indicating that there is a great probability that that low there of 33,449.60 should be broken before that high of 33,973. So this market, there was news items, very important news items. The CPI news report came out at 1:30 p.m. UK time, 8:30 a.m. Eastern Standard Time on Friday, and the equity markets rallied, and they've done their best, as you can see here, to rally. But the important thing, remember, we had based on probabilities and analysing the most powerful single vertical bar setup, there was a probability that that market should break the low before the high. And the high here was 33,973.90. That market went up, and this is the power of knowing price action, folks. Because if you were bullish this market and you were long, and if it got over that hurdle, yes, but when it cannot get over this bearish bar hurdle, because this market went to 33,962, it would within 10 or 11 points of breaking that bearish bar price structure. And that market sold off, and that market came down, and you can see it's what we call an inside bar, but it's closed closer to the low than the high. But it's not this bar that's most important, it's this bar immediately to its left. And that low there has got a low of 33,449. And therefore, on that analysis, just on the daily price bars alone, we'll take a look at the weekly now for a second. That is telling me that we've got a greater probability of breaking that 33, what is it again? 33,449. The market is 622. So therefore, I'm looking to get short. I've been looking to take short. I'm totally flat. I have been short this market. I've been short the DAX. I came out of my DAX close to the close on Friday evening. So all of this is based on the simplicity of analysing the single price action vertical bars. So although we've got an inside bar, a bearish bar, most importantly, we've got this outside vertical bar to the downside where 33,449 should be broken to the downside. Now, if we go to the weekly chart, then let's analyze that. And you can see here that we've got a bullish weekly bar from last week. So we have. Now, also, this market traded at gap down, obviously with this horrible news of the Israeli Palestine conflict, and the markets gapped down last Sunday evening UK time when they opened up, or Sunday night at 10 p.m. But this was really an opportunity from which to go long these markets, providing you have the intraday long signals. What are they? They're higher confirmed vertical bar lows. Because we knew that there was a greater probability with a weekly bar that that high should be broken before that low, and that's exactly what has happened. Now, also, we've got a slight conflict here because that close is closer to the high than it is to the low. Okay, and therefore that's telling me that we should break that high of 33,973.90 to the upside. Now, when I say we've got contradiction, because we've got a daily price bar here is telling us that we should break this low at 449 to the downside first. Now, if we break 449, it's fine because we're miles away from that low there of 32,816. We're talking about a low here of 30, this low here, which is a low of 33,449. Okay, 33,449. So we can still achieve our daily price action objectives and also not break the bullishness of our weekly bars. But if we're short and that market looks pretty weak as it is as we speak, then I know, and I'm telling you now, that the low that you need to look out for in the support line is that low at 33,112, because we know if last week's low was broken to the downside, this 33,112, if that was broken to the downside, when technically speaking, based on probabilities, the high should be broken to the upside first, then that's like flipping the coin on its head, flipping a bullish scenario into a bearish scenario. So keep that in mind. So therefore, we're short the Dow, looking to get short to take that 449 out to the downside, but also being very aware that there's big support, which is the weekly support of 112. But 449 from 112 is about just over 300 points. I would gladly take 2 or 2,500 points of that, as I'm sure you also will. So let's go on to take a look at the FTSE. This is the FTSE, the UK 100 up here. And again, you can see a very similar setup than and that mimics practically the US Dow Jones, because what we have got, this is a daily time frame chart. We've got a very bearish bar on Thursday, or on Friday, I should mean, indicating that we should take that low, and that low is 75.92 out to the downside. We had that also last week. Look, we had a close that was closer to the low than the high, and therefore any intra-week rally, everybody, is really opportunity from which you're looking to get short based on the bigger picture timeframes, on the bigger picture timeframes. But if we flick over to the weekly chart, like the Dow, we've got a little bit of a conflict because we've now got a bullish, for 2 weeks here, we've got a bullish weekly bar. We had last week, market again gapped down with all the bad news, and then it rallied. Again, that's what we were expecting, just based on probabilities. So again, this week you can see that this close is closer to the high than it is to the low. Therefore, it should take the high during the next week, which is starting tomorrow, out to the upside. But if it doesn't, because we've got a daily conflict that's telling us we should break the low first. But if we do not see, if we see that market breaking those lows and being very, very weak, then again, the same thing, we know that there's big support there at 74.71 on the FTSE. So a break of 74.71, everybody, would be indicating this market is changed from a weekly bullish scenario into a bearish scenario. But we know that's the hurdle that it needs to cross. Now, quite often you will get it achieving its daily price action objectives, which is taking the lows of Friday out to the downside, and perhaps then later in the week it not maybe trading down here. But we know that it only changes this bullishness on the weekly chart if it breaks that low, not until it breaks that low does that bullishness be negated and the bearishness returns. So therefore, it can achieve its daily price action objectives, but also then turn around into a week and a buy signal appears. And how does that appear? Again, higher confirmed lows. Okay. And again, if you're one of the lucky ones to have our software trading tool, if you're looking at intraday charts, then with blue price bars and a higher lows is what you're looking for. So again, initial weakness on the Dow and the FTSE, and then being very, very aware of the previous weekly lows is for support is what we're looking for from the outset. I'm just going to very quickly analyze the DAX because I realize time's going on here. You can see the DAX is slightly different, folk, because I'm looking at a weekly chart here. And you can see here that we've got a very bearish weekly bar. The close is closer to the low than it is to the high. And therefore, it should break that low before it breaks the high. So it's a different market when you're analyzing this based on probabilities in comparison to the Dow Jones, the US 30 and the FTSE 100. And also we've got that backed up by a daily price bar that's very, very bearish. Again, as I've said, we've had a fantastic interweek sell signal in the Dow. In fact, on Friday, I had a 215 point move on my final position, a 200 point move, and also on target one, we had a 70 point lock in. So we've had a real fantastic day on Friday trading the DAX. As you can see, all red price bars the whole way down. Fantastic signals the whole way down. But again, nothing will fall forever, and we have to be aware of that as traders. I'm totally flat the market, and again, I have to say that initially we're looking for a weakness. If we do not get that weakness on the DAX either, and it doesn't take out last week's low either on Friday's low or the weekly low of last week first, then that will only be creating selling opportunities until such times that those price action objectives have been achieved. Okay, so let's now look very briefly at gold and crude oil. Well, as you can see here, this is the weekly chart on gold. Last week, the gold hit support of, as per my analysis on my video for the week commencing last Monday. And we had a bullish weekly bar indicating that we should take the high out before we take the low, and exactly that is what it's done. This market has rallied quite considerably. It had made lows, so we had of 1844.23, and we've closed at 1932, up $90 an ounce gold last week. Now, one little word of caution here with gold, and that is it is closed on its very, very highs. Okay, now that is bullish in its own right, but remember now it takes the slightest little move for that price action objectives to be achieved. And quite often, and this is just from market experience, when I see a market that closes on its very highs or on its very lows, right? In other words, no tail whatsoever, then that market can certainly retrace. Okay, so I will not be rushing into trade gold on the early part of Monday. I will be wanting to see a little bit more price action on gold. It is nothing. Look at the range on Friday. One big large range on Friday after coming from a bearish daily bar on Thursday. Look, this low should have been taken to the outside, broken to the outside. It didn't do that, folk. Power of price action again, knowing that. You know that if that high is taken out before that low is taken out, that reverses a situation like flipping a coin, turning a bearish scenario into a bullish scenario. Was that a bullish scenario from 1885 up to 1932? Of course it was, almost a $50 move. So it was in gold. What one heck of a move. So gold will not be for me for the beginning of the trading week. Number one, you've got this large range day. When you get that, quite often you will get perhaps maybe a sideways day. Sideways days, folk, are quite dangerous because a market 1 minute is giving sell signals, 1 minute giving buy signals from an intraday perspective, and we don't want that. That's where you lose money. So I will be letting gold settle down, as I've said, to repeat myself. Both the daily, the weekly, and the daily have closed at their very highs. And when I see that there, as I've said, you can quite often get a retracement into that market. Of course, with the conflict that's going on in Israel and Palestine and that there, this is definitely having a reflection on gold prices, okay, without any question of doubt. So for me, I will just be sitting back. There again is our higher lows on a 1 hour chart on gold. So it is. And if I just put on my um, template, you can see that we were into blue mode in gold. Fantastic. The gap up over this last week, indicating strength. It did retrace here, folk. It did go into neutrality, and then it went back into blue mode down here, and that was the first bar. The second bar there at again 1880, somewhere between 1880 and 1885, and that mark went on to 1932. One fantastic signal, everybody. So you can see there the power of using price action, and also the power of having the ability to be able to use my proprietary software trading tool. Now, let us take a look at, we will take a look now at crude oil. So this is US crude, this is US crude oil, like crude oil. It's a market that's very close to my heart because I trade it regularly, folk. And as I said, we came down and we made a double bottom support slightly here, slightly higher low there. This is a number of weeks back. This has gone back into August, and then more recently here, um, August of last year, I should say, or no, 2021, the market comes down again, and again we made a double bottom here on crude oil, and it has rallied off that bottom. So if I just zoom in a little bit and we take a look, what we have, we had a bearish weekly bar in crude oil because crude oil was trading up here at 95.37. It came off, and it's after falling over this last couple of weeks and went to a low of 81.70. So quite a fall. And then last week, you can see exactly what crude oil has done. It has been trading inside this bearish weekly bar from the previous week. Now, I know, based on my understanding of price action, that we have a greater probability as we speak of taking that low of 81.70 out to the downside in comparison to taking out this high of 92.14 first. So therefore, although that market's been very strong, and let me just reiterate how strong it's been, we've got blue price bars. We're going to a 15-minute chart. You can see where we are. We've got very bullish day on Friday. Market's been good. But I want to go back to the weekly and just explain a little bit more. This means that unless that high is broken, this market still is not in bull mode. Okay, yes, the market's been in an uptrend. This is a retracement. But again, I'm looking for opportunities on an intraday and an intra-week basis. On an intraday and an intra-week basis, my opportunity in this particular market is to sell that market if I get the signal, which is a lower confirmed high, red price bars, to take that low out to the downside. So that is like crude oil. And again, if you take a look at the daily chart, we have a very bullish bar. It filled the gap, so it did when it came down over a couple of days, filled the gap, and it has to. If it's going to continue in this upward vein, it has to take that high at 92.14 out to the upside. I'll be looking for sell signals on an inter-week basis, as I've said, repeating myself, I know, until it breaks that 92.14. So I hope you have taken all info. You can stop and start the video, go over it, and you will find that looking at the bigger picture analysis means quite a lot. Okay. So if you'd like to learn more and you want to learn how you can take these decisions and learn our methodology, go to beawinningstrader.com/masterclass. You can sign up. You can watch a condensed version of a trading masterclass from which I will explain in greater depth how our methodology works. And remember, you can join our Discord channel. So somewhere within the description of this video, there will be a link to join my Discord channel. I will be putting up signals as I did on Friday. Certainly of the pound yen, which is my Forex market that I concentrate on. And again, this week we started to put up signals on the DAX. And again, let me tell you, just on Friday, we had a signal from which we got a first target hit at 70 odd points, second target at 200 points, and my very final position myself came out at 215 points. Great day it was, I understand. Not every day is like that, but again, we're winning more when we get it correct than what we're losing when we get it wrong. And that is the secret of trading. And that's all based on my price action methodology. So you can have a 14-day free trial to learn that, okay? Or to see how it works, all right? And there's education in there. There's VIP chat channels. We're there to help. We're there to further your education and obviously to certainly make trading work for you. Thank you very much.